Hey guys, it's Daniel from the S&G Bookkeeping channel, and today we got another tutorial for you guys, specifically with the equity section in your balance sheet. Now, as an e-commerce business owner, you guys are going to be taking money out of the business in the forms of distributions, and it's so extremely crucial to be able to track this in QBO so you know exactly how much you're taking out, when you're taking out, and have everything look nice and pretty for you on the balance sheet. And we're going to go into that in just a second. But before we jump in, I want to remind you guys that we are offering a complete free 2-hour personalized Zoom walkthrough where we go over anything your business is struggling with and explain it to you so you actually understand it. We go a lot more in depth than in these videos in those calls. So if you're interested in that, send an email to info@sngbookkeeping.com with your business name, and we'll get that scheduled as soon as possible. Now, Arthur's going to take us into the tutorial.
It's your favorite day, it's payday, and as a business owner, it's super important that you learn how to record and track your distributions that you pay yourself from your business inside of QuickBooks Online or any accounting software that you use to make sure that you have accurate and up-to-date financial statements. So let me show you how to do that inside of the sample company with Craig's Design and Landscaping. The first thing I want to look at is under transactions. If we go to the chart of accounts and look at some of the equity accounts, which basically has to do with the ownership in the business. So we only have two: opening balance equity and retained earnings. We want to actually add some accounts for Craig to see how much he contributed, distributed, the business distributed to him, and any capital that he has invested in the business. So we can do that by going to new, and we'll call this Craig. Let's just say his last name is London. Equity, we'll choose that, and then obviously it depends on the business, but he could be the main owner or he could be a partner in the business. Let's just say in this case he has a brother who does the bookkeeping for him on QuickBooks Online, and he takes care of the landscaping work. So they got a 50-50 partnership. So we'll just call this one Partners Equity. Leave the opening balance at 0 for now. And then we want to add some more accounts to get some more detail about his transactions with the business. So we can call this one Distributions. This one will also be an equity account, and we'll call it Partner Distributions, sub-account of that main account that we just made. And we'll do the same for Contributions. It's equity, Contributions. And you can actually see these if you scroll down. Oops, I forgot to make that a sub-account. Let's see if we can find that. Contributions. There we go. So let's edit that. And let's actually make it a sub-account of Craig London. Now if we go to the chart of accounts and we just delete this, we'll see those two accounts, contributions and distributions. And we want to add one more just for his capital. Equity, we'll call it Partners Equity. Make this a sub-account of his main account, and there we go. So now that we have those added, you can see those three are right here. We can actually start to input that information onto any transactions in the business. So typically, if you're paying out a distribution, it might be a check, it could be a transfer from the bank. You could even record this as a journal entry, but let's just say actually Craig was paid with a check from the business. So who do we pay? Craig. Probably gonna have to add him as a vendor, Craig London. So yeah, let's add him there. From the checking account as of today's date, and we can just call this one, man, I cannot type today, distributions from Craig London. And let's say we got a $500 distribution, so we can save and close this. Now if we take a look at our balance sheet as of today's date, let's run this, and we scroll down to equity. You can see that Craig actually has a negative $500 balance in his distributions, giving him a total of negative $500 for his equity, which might not make sense, but given that this is a partnership, this net income account will close out to retained earnings at the turn of the new year. And then depending on the partnership structure, as we mentioned, it's 50-50. 50% of that would go to Craig, to his actual equity account, his capital account, and then the other half would go to his brother. So let me just show you how that would look like. Let's say we're at the 1st of next year. We'll run the report. We'll see that net income is now 0. All that transferred to retained earnings. So let's actually take this retained earnings number and we can make a journal entry where we debit retained earnings and then credit his capital account, so the sub account, and we'll divide this number by 2 since it's a 50-50 partnership. We can just copy that as of the end of that year. So now if we look at that date, we'll see that his capital, we distributed that retained earnings. See the other half, we haven't done that. That would be for his brother. To his capital account minus 500 distributions, giving us a total of $321 for Craig's equity. So I hope this helps you figure out how to record a distribution inside of QuickBooks Online. And thank you so much.